So I just wanted to go over a couple of ways based on the tape to help with your trading. So Eli, you mentioned this CRTO on the open, and so the thesis is, hey, this could be really weak, it's gapping down, great idea. We talked about how we really like that idea, something that really could get weak. I think maybe even Eli, you said something that could trade low of day. So what I'm about to sort of go over is not short a stock just based on the tape. It is, the news is really bad. We talked about it in the AM meeting. It's gapping down. There's some price confirmation. And then in this case, the opening drive is hard to the downside. And so if you had missed, like I had, that opening drive to the downside, how do we figure out how to get back in it in a way where we can control our risk? And so the title of this is, oh, this is Teva? You got Teva. Oh, shit. Oh, okay. You do the other one? Yeah. Okay. We'll do Teva next. So the title of this is How to Short CRTO at 2460 at around 938. So let's go. So again, we're looking to short. When we make trades, we've got to control our risk reward. And so let's just take a look at how you might do that. So I will verbalize it. Can you bring up the chart from today? So we have that tough down move right on the open in CRTO. And then goes back up to 2460. Going up, goes up to 2460. And if you were, and I was just watching the tape, I'm looking for a fight. I'm looking for an area of consolidation. I'm looking for there to be buyers and sellers. I'm looking for there to be a battle. And I want to see if somebody will win. And in this case, so we've got this really great thesis. We've got this really good idea. We're just patient. I mean, it came up and 60 by 61. So at 2460 and 2461, they just started doing all this volume. And then 61 cents lifted, and so you were thinking, what? It's going up. And it went up like 2 cents, and then they came right back down to 60. It couldn't go up. Like 61 lifted, they came back went to like 63 cents. They came back down 61 by 60. And again, like 60, if you were really watching the tape, there was just 60 wouldn't drop the bid. Lots of dark pool prints at 60.5 cents. Much more volume being done here than at any other point. And then 60 dropped the bid, and sort of what do? I hit two tiers, and now I don't know this idea as well as you do, so it wasn't really my idea. So I wasn't really saying to myself, I'm going to swing it, because I wasn't really watching it that closely. But you could have just said, I'm going to swing it from here. So I hit it, and what I noticed was that, when I hit something like that, what do I expect?
Split out quickly.
And unfortunately, there was like another big battle at 50 cents. And so it got below 50 cents, but it dropped, like 50 cents bought it on the bid, dropped it out to like 23 cents, but they were like paying all the offers at 50 cents. It was really weird. And so when I saw that, what do? I've got 2 tiers. I lightened up. I was actually able to get out of some on the bid. I didn't like the fact that they were paying the offers at 50 cents. Like there was a buyer at 50 cents who didn't drop, was stubborn. He finally dropped, and then they were clearing all the offers at 50 cents, but they were allowing people to hit the bids in the 20s. So I got out on the bid, got down to tier 1, and I held that one. And I just sort of said to myself, if it ever got above 61 cents again, maybe I'd cover the other. And then finally, 50 came to the offer and wasn't getting cleared right away. So what did I do? I added back. I was actually able to add it 44 cents. Okay, and then the thing just spiked down, and I covered it. I covered most of it, and I sort of sort of moved on. I did reshort for a swing. I did reshort for a swing when it made that new low down to 23. See how it goes to 23 at about 10:20. So 24 was the level, and it goes down to like 23. And I shorted. I was going to short up into 24 again. So I shorted in the 40s, and I was going to short some 70s and in front of 24 and covered above 24.50. But I did swing it from there, like around 23.50. I think I got at 48 cents. So I'm short from there. I don't have a big position, but I'm just swinging it from there. Finally, it was interesting. Like at that point, at 24.60, it was like your idea, Eli. It was like, this is Eli's idea. And then for whatever reason, it became my idea later around 20, when I saw it get below 24 to go to 23. It started to make sense to me that this could go to the low of the day. Maybe I'm crazy, but I don't think you want to just trade. If you have somebody's idea and it's not your own idea, I think it's hard to trade that well. You have to sort of believe in it. Like I could see the failure from 60 cents. I could sort of trade that, and it was too steep. It like went down really fast, almost a point. So I took off a lot of risk. So I was like, I don't know, that was pretty fast. Like that was pretty good. But anyway, that's what I'm doing with that. All right, let's go talk to. Do you have a position in this?
Right now?
Yeah.
Yeah, I do.
And you short and open.
I was covered it in, so it's flat until it tests the Fed like consolidation up against VWAP, and it just couldn't get through. I think it was like it tested 50 cents, but like really 40 cents was the level, and somebody would just like re-offer every time it got over, and so I started shorting into there, and so now I think I'm gonna just try and hold it.
Yeah.
Unless something else. Something would have.
Yeah. Anyway, let's take a look at Teva. Anyway, so I bring that up. Like, I think we've taught this class for a long time, and I always think people look at the videos and they think that all of our decisions are made on reading the tape. The videos are in the training program to help you to understand how to read the tape. This is a perfect example of what you need to be able, the skills you need as an intraday trader. So like Eli has an idea that he wants to short it. I suppose you could have just hit the bids right on the open, and I suppose that would have been as good as any other idea. But the idea is, how do I take an idea and get in with a lot of size where I'm controlling my risk so I can trade really big positions? Like you need to be able to like see those pockets right there where something's going to happen. I really structured a trade where if I had been swinging and I had your idea overall, I could have structured a trade where I was risking 10, 15 cents on decent size to, be in something that eventually went down. I think it's 2 points lower from here. Is it 2 points?
Yeah, 22.
It's about 2 points lower, and it could still be working. So that's a way to not just be reliant on an idea, which I don't know many traders who just can trade off of ideas who make money. You have to be able to trade off of ideas and price and get in at good prices. Okay.
Did you not trade before that 24.60?
I didn't do anything before. I didn't play the opening drive in it. I was trading Teva.
Working its way up, because I was getting caught up oh, here's a battle at 30 cents.
Yep.
Get in and 50. It's like. You
cover it. If you see a battle, if it's going up and you want to be short it, and you see a battle, like this was a pretty big battle. I don't know if you defined battle the way I defined battle. Like it was evident that this was a moment in time for the stock. Were you watching it around there?
Yeah.
Did you watch it around that 60 cent area?
Yeah.
I mean, it was a big, and then the 50 cents was a big battle too. Like this was the inflection point.
Yeah.
Into the up move. And so, yeah, but if you feel like you see something and then it doesn't work, you just cover it. Like you have to cover it. And, we've been talking about this in GBTC, which is we think GBTC is trading too high. We think that Our thesis is when the futures came out for Bitcoin, GBTC's premium should do what? Should come in. Like, that makes perfect sense to me. And what's happened since the futures have started trading? They've expanded. Actually, the premium expanded. That makes no sense. And so that makes no sense. And so as a trader, you put on the trade saying, I think the premium's going to collapse. And then when it doesn't, you just have to cover. Like, you know, I suppose the alternative to that would be just to short more into the up move. The problem with that is that you put yourself in a position where if you're ever wrong once, you know, you're going to really get killed, which you just don't want to do. You know, so anyway, all right, let's take a look at this Teva. So what's my point here? Adding Teva. Okay, so this is an example in Teva. So I hate this stock. This stock always reverses on me. I think this is a terrible trading stock. So like, I was messing around in this idea, but it still brings up a way to add to a position that is worth teaching. But I had no confidence in this idea at any point, because I always feel when I'm trading Teva that whenever I think it's really, really weak and it's really, really going to go down, it goes up. And whenever I feel like, you know, it's really, really going to go up, it just reverses on me and goes down. It's just like, that's the thought I have in my head. I don't believe any of the weakness. And so it did actually start to get weak on the open. What time are we looking at? 9:43? Yeah. Okay. So it did show weakness on the open, pulls into 18, and then 18, and I was short, and then 18 became a big level. So I shorted it. It failed at 18.20. 18.28 was really the inflection point, the first inflection point in this. If you were watching the tape, that was the place where they were buying a lot on the tape. There was just more volume done at that price, and then it got below there, and that's what caused the stock to go down. So that was my inflection point. An area might be 28 cents to 30 cents, but that's where 28 cents is really the price. And so I was short from there, I was going to cover 41 cents and seeing where this would go. And then they had another fight right around 18 bucks, and you couldn't tell whether it was going to go up or whether it was going to go down. I had my stop at 31 cents, and I was thinking to myself, you know, it was still going, it still had shown weakness, still up a couple of points. There's a battle at 18, and I actually thought I was going to get stopped out. But, you know, if you're short from 18.30 and it goes to 18 and you don't cover, and then you see more weakness and a failure from 18, what do you need to do? You need to add more, or else you can't hold, then don't hold it. It doesn't make any sense. Like, if you're going to hold that from 18.30 down to 18, and then there's a battle at 18 and you show weakness, you either cover it, or if it gets weak, you got to add to it. So this is an example of how you would add to it. So go to that 43, 943. So what I'm looking for is I want to see, I could have just shorted 18 and hoped for the best, but I hate the stock and I don't want to do that. I swear to God, if I would have shorted this, if I would have shorted more at 17.99, it would have went up. That makes no sense, but it would have. I'll bet you, and this clearly is an irrational thought, but so I don't want to do that. Let's go to, do we have the time? We're at 41 cents. Go to 43. All right, 41. What we got? Go ahead. Don't read my email. Trade Bitcoin. I'll read my email. I can show you how, like, I'm not even really watching it at 18. I'm looking for it. I really am looking for it to move away from price and show me that it failed at 18. And then I guess I put my stop in here. I'm putting my stop in. I moved my stop down to 21 cents from 31 cents. Because I actually feel like I'm just going to get stopped out and I want to do other things with my life. So it was 31, then I moved it down to 21.
How much do you think you're going to make on this if it broke down?
I thought I was going to lose money no matter what I did. But I was in it from 30 cents. And the point is, it really does give you a good opportunity to add to it. And I want to show you how to do that. Here I'm thinking about getting long PTI at 5 and scalping it back up. All right, so see that?
I haven't seen that.
Okay, so it just went straight down, right, to 75 cents. And I hear Spencer calling it out. It's clearly moved away from price. It's clearly failed at 18. It didn't just like roll over. It went straight down 25 cents. It went straight. It was straight down. That is a sign of weakness from the tape. So when I see that, all right, what do I want to do? Yeah, you want to wait for a pop to add. So I'm looking for a place to add. So I'm first thinking 89 cents, and then I have to actually adjust my price. You'll see. Go ahead. Now, I hate the stock. I still hate it, and I'm like, oh, do I really have to add to this thing? Goes to 75 cents, and I start to put up some offers at 89 and 88 cents. I'm up at 89 and 88. Stop. But you know, now it's like I always actually think 87 or 89 are going to be levels where you have to put it up when you see weakness like that. And what I did here was I noticed it's just stopping at 87 cents, and so I actually put it up on the offer right here at 87 cents, and I got it pretty quickly. Usually, what you have to do is you have to go hidden midpoint 86 and try and get it at 86.5. But I ended up getting it at 87. I noticed it should have just went up to 89, and then it just wasn't. So I had to come down a little bit on my offer based on the fact of watching the tape. So go ahead. So I had to be a little bit flexible to sort of get it. So my measly position, I do double up my position because it's working. Okay, now I set a stop for half of what I just added at 1801 because it actually never traded above there. The position I just added, I'm ready to cover at 1801. I'm thinking about tripling up, but I'm like, I hate the stock. If I didn't hate the stock as much, I would have tripled up. And it goes down. I think that's probably it. It goes down and I stop and take. So anyway, that's how you add to a position. Went down. I actually ended up covering it. I covered almost all of it at 50 cents, and I got stopped out of the rest of it at 1801. But I covered about 90% of my position at like in the 1750s. Actually, the 40s. I covered it near the bottom. I think I covered it near the bottom. Yeah, I covered it in the 40s. You know what happened? News came out in Teva that the drug price is going to be lower, and the time that it came out, the stock had made a pretty big down move in price, and that news came out, and people were like hitting the bids down there, and it wasn't really going down. It wasn't really at a good price to be playing a breaking news trade. It was a terrible price. Like even if it went up to 70 cents, it was still going to be weak. So people were hitting in the 40s, and they were like 25 cents of issue in terms of being at a bad price. So I actually took up most of it at 40 cents, 41 cents, and then I just set my stop for 1801, and I got stopped out of the rest. And now I'm not watching it because I hate stock. Anyway, that's the principle you want to learn. How do you add to a position? And that was an example. Thanks.